Did you know your insurance company knows a lot more about you than you think? I'm talking about your driving habits, your spending behavior, your neighborhood's risk level, your credit score, and even your daily routines. And here is the most shocking part. They use every single one of those details to decide how much you pay. Today, we're pulling back the curtain to reveal the truth. You'll discover how insurance companies track you, what data they collect, and how they secretly use it to calculate your premium. Stick with me, because this information is going to change how you see insurance forever. The first secret is that risk profiling starts long before you even get a quote. When you request a quote online, you're not starting with a clean slate. The insurance company has likely already built a risk profile on you. Using information from third-party data brokers, they already know things like your age, your location, the type of car you drive, how far you commute, your social demographics, your accident history, and even your credit score category. So, before you even click that Get Quote button, they've already got a good idea of what you'll pay. Insurance companies don't just sell protection, they sell risk prediction, and in their model, you are the product. Now, let's talk about what they know about your driving. Even without a tracking device in your car, even if you never install one of those telematics devices, your driving risk is still being calculated. They look at your car model and its average accident risk. They analyze your zip code's accident frequency, traffic patterns in your area, the typical weather conditions where you live, and even the quality of the roads and the number of traffic lights. They even have historical crash data for the streets right around your home. For example, if your neighborhood has a high number of nighttime accidents, your premium might go up. Even if you never drive at night, AI doesn't judge you personally, it judges people like you, and then applies that risk to your price. The same goes for your home. Insurers know a ton about your property, even if you've never filed a claim. Home insurance companies analyze flood maps, crime rates in your area, the fire department's average response time, and how far your house is from the nearest fire hydrant. They also consider the age and materials of your building, weather risk forecasts, and storm frequency models. If weather patterns shift, if crime rates rise, or if the risk of natural disasters increases in your region, your premium can go up automatically. You don't have to change a thing. The environment around you changes your price. One of the most powerful yet hidden factors behind your premium is your credit score. Companies quietly use your credit to predict the likelihood of you filing a claim, the chances you might pay late, and your overall financial stability. A higher credit score often means a lower premium, while a lower score can mean a higher one. Even if you've never caused an accident, never missed a payment, and never filed a claim, your credit score alone can raise your price. And the most surprising part, insurance companies rarely tell you this directly. In today's world, it's not just about paperwork anymore. Algorithms are also analyzing your digital behavior, anonymously but powerfully. They might track the time of day you request quotes. Late night users are sometimes labeled as riskier. They look at the device you use, whether you comparison shop, how quickly you buy a policy, and even whether you read the policy documents or just skip to the end. This data isn't personal, but when it's all combined, it predicts your behavior better than you might think. The AI knows if you're a careful planner or a rush buyer, and it prices you accordingly. Your price is also affected by something you'll never see, a behavior score. Companies purchase statistical lifestyle data from analytics firms. They can estimate if you commute long distances, if you often drive during peak traffic hours, the accident rates for your age group, and even the health risks of your demographic. This creates that silent score that heavily influences your premium. And finally, remember that insurance pricing isn't personal, it's mathematical. The behavior of your entire community affects your bill. More crashes in your city, more medical claims in your age group, or rising local repair costs can all make your premium go up. So, with all this tracking, what can you actually do about it? Here are a few simple steps to take back some control. First, keep your credit score healthy. This alone can make a huge difference. Second, Shop around every 6 to 12 months. Algorithms change, and another company might see you as a lower risk. Third, consider bundling your home and auto policies, as companies often reward that loyalty. And fourth, try to avoid making small, unnecessary claims, because even a minor claim can lead to a big price increase. You can't block the algorithms, but you can definitely outsmart them. Insurance companies don't just know your age or your car, they know your patterns, habits, financial history, and your digital footprint. Now you know the truth. You're not just a customer, you're a data point in a massive system. But with the right knowledge, you can finally take control. If you want to learn more hidden truths the insurance industry doesn't want you to know, subscribe for more. Knowledge is your best power and your best protection. Thanks for watching.